So our plan for today is to, since we've already kind of reviewed how the program intermediaries put the client information into QuickBase, we're going to pick up with a fake client that Nick and I made that has gone through all of kind of the program eligibility criteria with the PI as if we're a lender. And then we're going to kind of toggle back and forth between the lender and PI screen so that you can see how the lender information and kind of like work scope information, how that transfers between the lender portal and the PI portal. So right here on the screen, you can see what QuickBase looks like when you have to log in. So we're going to start from the very beginning.
Right.
Hopefully. And then when you log in, you should only see RRR. So you would click on the blue RRR. And then from a lender's perspective, you'll be able to see the clients that the PIs are working with. And the best way to find a client who is referred to you is to search their address. And so for our example, we are doing 1515 Arch Street. And so from there, you should be able to see that Clarify in this scenario has worked with this client and that they've agreed with the disclosure form. We didn't put in any specific names, but that Clarify has also said that they meet the program eligibility. So then from, oh, and another thing is that the PIs and lenders, based on your login, your like Finanta, Univest, Clarify, PCCA, PHMC, all of your fields will be automatically filled in. So anyway, you would click on the client and then you would want to click open for editing. After that, you should be able to see up at the top left hand that the client meets the program eligibility criteria. And should they not meet the program eligibility criteria, the list of issues will be populated. Perhaps if someone doesn't have homeowners insurance, that will be listed there for you to see. And then if the lender would like to pre-qualify someone and go through all that underwriting, we would put in the pre-qualification date and the pre-qualification amount. We received a request that if someone is not able to be pre-qualified because they do not meet the underwriting criteria, that there is a space to indicate why, and so we added that. And then from there, you would hit save and keep working. And so now we're going to show you from the PI's perspective what this looks like. So now this screen is as if we are logged in as the program intermediary. And so if you go down, you can see all of the information that you put in, and then right where the mouse is, you can see that the lender, Finanta in this example, pre-qualified this homeowner for $24,999. So that enables the PI to know that they're able to move forward with the homeowner. And so after that, the PI would do the home assessment. And so we're going to say that that happened today, the 22nd. And they would also want to enter the minimum home quality standards information. It's going to prompt you to save. You want to save. And so these are those minimum health and safety requirements that we spent a very long time working on. And for this example, we are going to say that this homeowner needs to stabilize their roof before they can move forward. And so we'll hit save and close. And now let's go back to the lender. So now we're back in the lender screen. and someone at Finanta can see that the PI went and did a home assessment, and that the only minimum health and safety requirement that the homeowner has not met was repairs to stabilize their roof. So then from there, the homeowner would apply for a loan. We're entering the credit agency, the date that the credit score was pulled, and the score. If there are multiple borrowers, you can do the same information for both. And then we want to add the income and DTI information. So in this example, we're going to say annual income is $50,000, DTI is 37%, home value is $100,000. The LTV came out at 90,000, and the individual was approved for the maximum amount, which is 24,999.
Jane, this is Lucy.
Yes.
From Univest. I have a question. What you just did was that the pre-qualification is done before an application is taken?
No, so the pre-qualification happened on the 22nd. The pre-qualification in this example happened, can you scroll up, Nick? On the 22nd. And so they go in first for the pre-qual, and then the PI goes out and does the home assessment, the minimum home assessment, and the homeowner gets a quote from the contractor, and then they come back to the lender, and then they fill out the real loan application.
That's not the way we're doing it here.
No, it's not.
Dana, do you want to chime in?
Yeah, but you know what? This might be more of an off topic. This might be a whole nother conversation, but no, we're not processing it that way.
Okay.
Okay, well, in the program guidelines, the way that we kind of agreed based on the ones that we all signed the agreements on the 13th of November was that first the homeowner comes in, and if they met the program eligibility requirements, they would submit proof of income, proof of insurance, property taxes, and then they get a pre-qualification amount from the lender. The pre-qualification amount is good for 120 days, and then we decided that the PI goes into the house and does the home assessment, and the reason that we decided on that order was that we didn't want the PIs to be going in and coordinating with contractors and doing the home assessment if the borrower was not going to at least be pre-qualified for the loan. And then after that, the homeowner gets kind of a work scope and figures out, kind of has a contract with the contractor, and then they go into the lender once they've come up with a work scope that includes a contingency, and no less than 60 days after their pre-qual, they go in and they fill out the formal full loan application.
Lucy and I will catch up after the call.
Okay, yeah, that's what we decided after all of those process meetings. So
Lucy and I will catch up after the call.
Okay, sounds good. If you want to talk more about it offline, I'm happy to facilitate that discussion. Okay, so moving forward, we have
Jane.
Yes.
And I'm sorry, I took it off mute for a little slowly there. Is there any way to put a notification back to the PI that the pre-qual has happened? And I don't know if we asked that originally, and this is going to come someplace else also, or like that the lender knows that, like, are there alerts that could come to, like, tasks, I guess is how it comes in, as an email to the PI whose client has been pre-qualified, or for instance to the lender or to redevelopment authority, if by 60 days there isn't the inspection input? And,
Hey,
and
Jill.
Nick, that may be a question to you. Yeah.
We can definitely start with like notifications for pre-qualification. Like if that date gets input,
Yeah.
we can send you an email notification. That kind of, the question I would have would be, who would get the email notification? Like an admin user like yourself, or the assignee of the actual client file, like the creator? Or
I would
both?
say probably, I mean, if there was it could be both, or it could be just the admin at minimum. The only reason why is, you lose track of
Yeah, no,
who did we send in, you know what I mean? And the system isn't set up right now to drop reports that I could pull a daily report, or maybe and that might be the other answer, is just pull a daily report. But it seems like maybe just an admin email that a pre-qual has been stuck in somewhere. It's just, I'm just trying to think about, like, it's going to be tough to kind of get contractors and things coordinated. We don't want to mess with the 120 days, number one. Number two, we don't want to mess with just generally the being efficient to the client, being responsive.
Yeah,
I may be bark.
Sorry, go ahead.
Excuse me. I didn't mean to jump in, but I may be barking up the wrong tree. But I was under the impression that once the client is pre-qualified by the bank or the lender, that the client would then contact the PI so that the PI can go out and do the assessment. Am I barking up the wrong tree, or?
No, that's right.
No, but that's just it's a belt and suspenders.
Both of you are correct. So the homeowner should, once they're pre-qualified, get back in touch with the PI so that they can coordinate the home assessment. And
Right.
It makes sense to figure out either a reporting mechanism or an email tickler that notifies the PI that the client has been pre-qualified, because it will help you coordinate follow-up if when necessary. And so
Okay.
my suggestion would be to give, I think this is like a perfect question for this discussion, and Nick and I will spend a little bit of time thinking through the best way to notify you guys where folks are in the process.
Okay.
Okay, so now the homeowner has been formally approved, and we're going to go back to the PI interface. And so right now you can see all of the information about the homeowner's actual loan application. And in this step, the PI can indicate whether or not the contractor is an MW or DBE, and then also if they are self-certified or listed in OEO. And then we would want to go into the work scope information. It's going to prompt you to save. And as you can see in red, any minimum home standard issue will be highlighted, and you can't save this unless you enter an amount that the homeowner plans to spend remediating this issue. So we just said, for the sake of the example, that it would cost $5,000. They're also going to spend $10,000 on repairing windows, and then they have $5,000 that they want to spend on bathroom repairs. And so we'll hit save and close. We can see now in the initial work scope area how much, kind of the breakdown in each bucket. And so now we're going to go back to the lender. They can see how much the homeowner plans to spend. And so now that the application has been approved, we have a formal approval date here, which is, I think that we need to remove this one because we actually have the approval date up at the top. So we're probably going to get rid of this one. But anyway, then the lender sends out an inspector. And so we're going to say that happens on the 5th of February. The work gets carried out. If in the interim there is a change order, the lender can go into the work scope information, and in this change order section in the middle, they could add an amount, for example, $2,500, which would say that the roof actually wound up costing $7,500. We're not going to do that for this example, but that will enable us to keep track of, because this is structured as a line of credit, not a term loan, from the loan approval through construction. It'll allow us to keep track of whether or not there were some extra issues that the contractor homeowner ran into that resulted in a change in the final loan amount. And then we have our final inspection, which we're going to say is on the 5th of March. Our loan closing is on the 9th. The lien is recorded 2 days later. We didn't have any change orders that resulted in a change in the loan amount. Well, it actually wound up being $20,000. And so this is the important part of having it structured as a line of credit and not a term loan, because the final loan amount can be different than the amount that someone was approved for.
We should be sure we're not calling.
And then we have our term out date, which is the date that the check is cut to the contractor and the homeowner. We have the lender available for purchase date, which is when PRA is ready to, or when the lender is ready for PRA to advance funds to them. And then we have the date that PRA actually does that, when we send you guys the loan principal and all of your fees. And then we have the date that you then assign the note to us, which we're going to have as the 20th. At the bottom, the note, mortgage, full loan packet, and all the assignment documents can be uploaded as PDFs. And just to show you how you do that, you just click on choose file, and then it's kind of how you would upload or attach a file to a email. And then you can indicate at the bottom when you mailed the documents both to the trustee and when you mailed the final copies to us. So that is kind of how the lender information interfaces with the PIs. Really quick before we take questions, we just want to show you, not that you'll be able to see this, but just from our internal reporting purposes, how this information is going to be used for invoicing. So the requisitions on the far left, that's how we interact with the city treasurer for the bond requisitions, which has not much to do with you guys. But what does have to do with you is the PI fee, which you can see next to clarify. Once the loan approval date is entered, the PI fee winds up getting recorded into this requisitions document. And then also the loan principal and bank fees also are automatically updated into this document. So this enables us to know on a rolling basis how much money we need to send to the PIs and the lenders, and in turn, how much money we need to requisition from the city treasurer's office from bond proceeds. So this is how we're going to manage administratively on the back end payments and invoicing. And it's all kind of triggered based on the loan approval and loan closing dates in the application. And so just kind of a extra explanation of why this is useful and important. It enables us to pay you. So I think that's all that we have, but please ask questions.
will vendors be able to, whether it's PIs or banks, be able to have a report that they can drop out of their own, showing where they are in terms of expecting, if we have to forecast or something like that, to be able to see that same sort of screen, not with everybody's information, but just ours, rolling how many we've closed.
So you want to know, based on the loan approvals that made it to the lenders, what you can expect in payments from PRA. Is that your question?
Yeah, to go get, yeah, that's, yes.
Yeah, that's something that we can work on.
Yeah.
I know we haven't talked about reports. I think, Nick, we said after this gets going and we could figure out what reports we need. And that can be a separate conversation as well, but just because you showed that when I asked the question.
Yeah, no, that's definitely the next step.
Hey, Jane, I have a couple of questions. This is
Yep.
Michael. I didn't see any contingency built into the budget. So, we're going to require the 10% contingency. That should be a line item so that it's part of the total budget amount.
Okay, we can add that.
Back at the beginning, when you first started, there was a field for pre-qualification date.
Uh-huh.
And then there's a box for reason borrower not qualified. So if the borrower is not qualified, are we still putting in a pre-qualification date because they're not pre-qualified, right?
No, you wouldn't put in a pre-qualification date.
So you just leave that blank.
Yeah, and Univest requested, and I think rightfully so, that we kind of create a space where we can keep track of why. And this could even, if you think it should be a drop down or checkbox or something, we can structure it however you want.
Okay.
I mean, it could also be a report that we could pull.
I just had one more. So you had called it a line of credit a few times. I just want to be careful. It's really not a line of credit. There's a draw period and then it amortizes. So line of credit sort of implies that it's a revolving product, or that as it's paid down, it's available again. So just want to make sure we're not calling it a line of credit outwardly.
Could I tee off of that question, Michael? The one thing, Jane, you showed there was that there was no draw. It was just a payout completely on that loan.
Mm-hmm.
But there is the possibility of a draw if there's more than one. First of all, if there's a large project, and in the same vein, what if there's more than one contractor that finishes at different times? I thought we had discussed, and I may be mistaken in this, that we could cut checks, like 3 checks, but if you only have 1 checkbox and 1 space for contractor, etc., how do we handle that? And it may be in there and you just shot past it and I missed it.
No, you're right.
Like
I think.
Oops, sorry.
Yeah, what we came to was that if loans are above a specific amount, that the lenders would allow for at least 1 draw. And so I do agree with you that there should be a way to track those draws. What we began to build out is that there's the pre-construction inspection, there's a spot for an inspection in the middle, and so that inspection in the middle, the other inspection date would be when the lender sends out someone before they allow for that draw. And so I think that you're right, we need to add an option if that field is filled out for kind of when the first check was cut.
And this may be thank you. This may be a question for the lenders. Do you require, and I'm going to say this and probably regret it at the end, but do you require a contract so that, I mean, like, because nowhere in here do you have who the contractor is, right? For us to put in, Jane, and again, I may have missed it.
No, the
So, like,
contractor information is not in there, but as part of the loan application package, not the pre-qualification package, but the loan application package, there should be a contractor or some sort of a contract or some sort of agreement with the contractor showing that the the budget for the project aligns with the pre-qualification amount for the loan.
Okay, so that's where the contractor's name would be recorded with the bank. I'm just trying to, not overstep a bound, but just wanted to make sure that I was like, how are they going to get paid if you don't know their name? Okay, thank you.
I just wanted to talk about the draws. So my impression was Jane, what you just said, that there's I think it's a 30% draw that's available if the project is over $10,000.
Yes.
I don't believe we're cutting checks at different times to different contractors, right? I didn't think that was part of, I didn't think we were doing multiple draws in that way. I thought it was up to one draw to get it started. So at closing, there's a 30% draw if necessary. And then once all work is completed, there's a final draw.
You're right.
Yes, on page 8 of the
That's
program
correct.
guidelines, that is exactly what it says.
Okay, so Joe, I mean, is that
Yep,
aligned?
I heard you. Yep, and as I said, I thought, and I was not looking at I'm sorry, I can't look at the things while I'm talking to you at the same time. While I'm trying to look at the screens and just jibe that. That still said, and thank you, Michael, for correcting me, and Jane for confirming that I was incorrect. Can you tell me, though, you only have space for one contractor in terms of MBE, WBE, if there are more than one contractor, regardless of how wonky we manage to get them paid, or, cut 2 checks at the end of the period, do we just have one contractor listed as the?
No, we can list 2 contractors, and as I remember the process discussions, if there is more than one contractor, the lenders, and correct me if I'm wrong, but said that you could cut checks to different contractors.
Right.
But it has to be above $10,000 to do the initial draw, and if not, like if both of them are below $10,000, you would cut 2 checks at the end to each contract.
I understand that. That wasn't my question. Under home assessment, it says contractor qualifies as. There's only space for one contractor in there.
Yeah, we'll add another.
That's all. Thanks.
Okay.
Jane, this is Lucy. On the where we put that they qualify, if they don't qualify because their credit score did not meet the minimum requirement, so we would put that they do not qualify, and then we would put in that block that they did not qualify because their credit score did not meet the minimum requirement. So this is where we would put the fact that they were receiving an adverse notice that they didn't qualify. Is that correct?
That is correct. And if you would prefer it to be structured as like a multiple choice or checkbox with kind of the underwriting criteria so that you can just check which one they didn't meet, we can also structure it that way. It's up to you.
I think, Jane, that would help us better on the back end, rather than going through subjective notes.
Okay, so I'm going to change it so that it's the underwriting criteria and you can indicate which one they don't meet. And then we can also have like an other one if they're just not responsive or something.
Okay.
What else?
Jane, this is Lucy again. I have another question. In this website, there is no note of the homeowner's name. Is that correct?
No, so just for this example, we didn't go through and put in client names just because we like quickly made a fake PI client. But in the real ones where it says clients, you will have their name, and then also if they're people on the deed who are not borrowers, you will have their names as well.
But would we be able to search going into it by name instead of address?
Oh, that's a good question.
By default, the way it's set up right now, no. But we can pretty easily add that as like a filter.
if we could, that would be easy for us, because that way we would have a name. We don't have to go in and then look up what their address is. It's easier for us by name first, if it's possible, that we could search by last name, would be good.
It's easier for all of us if we could search by name. Trust me, Lucy. I would
Thank
appreciate
you.
that if it's something the client, that this PIs can have as well.
Okay,
Is that
yeah, I mean,
possible, Nick?
Yeah, we can add that to the both dashboards.
That'd be good. Thank you.
Mm-hmm.
And going back to the how we would be notified of status changes, how was that decided? So when, like, the PIs would go out and they do home inspections and they have the contractor ready, the contract is in, is there a way that we as the lender would be notified that this is now ready for the next step? Just like it would be if we add information in, that the PIs would be notified that there's the next step is ready. Was that decided on how that's going to be done?
I mean, we can add notifications at any step, but I think we would have to know what those steps were first.
Yeah,
We'll have to decide on that. Yeah.
I think that that's a great question, and that for the application to really work and kind of move folks along the process, that having those notifications is very important. I think that Nick and I just need a couple days, 2 days maybe, to think through what those notification points should be, and whether we want to structure it as a report and an email tickler. If it's an email, whether it should be admin folks or kind of line staff. We just need a couple minutes to think about it, but we can set that up both for the PIs and the lenders.
It might just be helpful at some of those critical points, and Lucy, or any of the lenders, Dana, you always say to me that there are certain things that get triggered that are required. Like if there's something the person needs to clear up after they've submitted the application, they have X number of days. Maybe that's a tickler, just so that if there's something that the PI can help with to avoid a miss on the client's part. Hopefully that's not too many. That's why I said just the pre-qualification being done. You would hope that somebody would be racing back and letting us know, but things do slip through the cracks. That's the only reason why I was asking, because I think that's a trigger for especially the PI to step up their stuff and get this inspection and all that going. That's why and we've been sort of thinking that that's a big, here's where the rubber hits the road. So maybe there's a couple of those points on things that we're putting in that make regulatory things happen. So that might be helpful to share with Jane and Nick if you spend a couple of seconds thinking on it.
Yeah, you guys, if you would send us what you think they are, and we'll think through what we think they are, and then we'll set something up. So just shoot us an email following this with what those critical points for you are.
Okay. Jane, I have another question. The first loan request that we received, and I know Jill and Dana were working back and forth on some issues, the sharing, what we call the sharing agreement, was locked out to the lender. So we could not go in and print it for our file. Has that been resolved for every loan going forward, or was that just triggered for the 2 loans that we have?
So we weren't notified of that issue, but we will work on it and make sure that you can see the data sharing agreement.
Okay, perfect. Thank you.
Jane, this is Cindy. I had a quick question closer to the end of the process, where we talked about the final closing date and the movement of documents. And I noticed that in addition to the note and mortgage or whatever items were there, it also referred to a loan package, and I'm not sure what that entails at that stage of the game.
So this is at the very, very end. So this would be the full loan package that you would send to an investor purchasing a note.
So I'm looking at Lucy here. Would there be documents that you're uploading at some point through the process or no?
The only document I think that we'd be uploading is the pre-approval letter up through the beginning of the process, because that's what the PIs need and the borrower's going to need to go forward.
Yes,
I don't know.
At the end, I think that we need in all of the loan information, since we're purchasing the note. So kind of that outlines like their payment agreement, kind of like the formal loan documents.
Which is basically your note and your mortgage document. What I guess what I was getting at, and I was confused, is I didn't know if that incorporated everything used in the process of reviewing, underwriting, and approving the loan.
Yes, yes.
All the customers' tax returns or pay stubs, and you're talking about every piece of paper that Lucy's group might be looking at
I don't
in
think
the
we want
underwriting
tax
process?
returns. No, but I think that we want, in addition to the note and the mortgage, like the final loan documents.
But they are the final loan documents.
Like,
I'm not sure what you're looking for.
Disclosures.
like and
So whatever else.
monthly, like this.
Yeah, I think so.
That'll be on the note. Okay.
All the docs sent to closing, is that what they?
Like that would be a closing disclosure.
Flood, your insurance.
Basically everything that on our closing checklist that we sent to closing.
Okay, I think talking internally right now, I think that the note and the mortgage might be enough, but let me just check in with Angela in our finance department to see if there were additional documents that she envisioned being necessary, especially as we're thinking through, we have to do a lot of like bond reporting. And so let me just make sure that there were no additional items other than the note and the mortgage that were supposed to be included in that broader loan package. But based on right now, it seems like the note and the mortgage should be enough.
Okay, and just to be clear though, there are other documents that might go to the closing table that are executed. That might be more what you'd be looking for as opposed to everything used through the underwriting and review process.
I think that that's probably then what she was thinking of, and we can list out exactly what those are.
Okay.
Okay.
Are there additional questions?
Is there a way, are we sharing like borrower documents? So once a client is confirmed or a PI says yes, they meet program eligibility, are they uploading borrower documents for the lender to access, or are we waiting on the borrower to come to the lender and then engage the process that way?
They're absolutely not uploading any documents in the program eligibility stage.
Okay.
Because of the agreement that we came to during the long process discussions where we wanted to create a hard line between program eligibility and loan pre-approval. So the PI is looking through saying we think that this person is likely to move forward and they meet the other programmatic criteria, and then that's when during the underwriting the lenders go through and like look at all of their documents, and you don't need to upload those on to this. You can just kind of say what the DTI, the credit score, and the LTV are.
Okay, so once they've been told they meet eligibility requirements, they'll just choose one lender or however that happens, and they'll engage. So the PIs will say, here's the contact information for one or both lenders, and then it's on the client to reach out to get that pre-approval.
Yeah, and that'll be that loan, the checklist, the loan checklist that has Finanta and Univest contact information at the bottom. And Aaron, since you're on here, we are waiting for PCCA's contact information so we can finalize both the PI flyer and the lender flyer. But once they go through the process with the PI, they meet the program eligibility criteria. The PI hands them that sheet, and then they can go to either lender and bring all that information with them.
Okay, how do we prevent people from going to both lenders and doing the process that way?
They can go to both lenders if they want. They can also go to the lender if they don't meet the minimum program eligibility criteria. But in the system, if someone's address and name are the same, a lender can't capture another lender's same client. Right?
Right. Well, lenders can't create records, but there should be a single record for every client that goes to a lender.
Mm-hmm.
So if a lender searches that address, they'll know, they should be able to see that they went to another lender.
Yeah, you'll be able to
assigned
see
them.
that the lender is at or that the borrower is already working with Univest,
Right.
Michael.
Okay.
What other questions?
Go up a little.
Okay, well, I mean, we have some follow-up items to work on, and we'll be back in touch once we complete those. If in the meantime you guys notice anything in terms of like making coordinating or using the application easier, or you think there are things that we missed, we're happy to make those changes, and I hope we've been responsive and have been making them quickly. We've definitely been trying. So if there's anything else that you guys can think of, please let us know.
Can I ask? It sounds like Univest has 2 loans. How are they? Are they approved, or what's going on with those?
We have one declined. One they need to clear up a couple of things. And Lucy, the last one, I'm not sure. The third one is, I think,
We're still
moving
waiting
forward.
for Doc.
Waiting
We're still
on
waiting
Doc.
for Doc.
Mm-hmm.
No, we need a pay stub.
Pay stub and I think there was a W-2 missing from 2016.
Okay.
So
And
we
then
have one that's looking, once we get the information that at least passed, I guess, the first sniff test, if you will, once we get the rest of the documentation.
Okay,
Right.
good. And I guess Finanza was sort of waiting for this training to kind of be ready to start accepting clients, and so I guess we can kind of just let everyone know that we're ready to start receiving clients.
And how do you want to receive those clients? Do you want just us to give them a phone number? Or just to say, just to call you?
Yeah,
with the early adopter period.
We provided PRA Jane with a phone number and an email address.
I know, I'm sorry. I'm just waiting on one more PI to give me their final information so that then I can have the final documents sent to our marketing folks.
Michael, can you just share that email and phone number with the PIs? Because we've just been saying to folks, I literally just been calling Univest during this period and saying, keep an eye out for Bob Smith.
Oh, okay.
So I would that's just for the early adopter period.
Sure, no, that would
if you could just send that around and say, and it may be that it's just for the early adopter period, it may just be you. And after the fact, it's a general phone number. I mean, it's sort of like I'm giving out my phone number to anybody I'm dealing with, but
we're going to have a dedicated phone number, dedicated email.
Right.
Yeah, so that's
exactly.
That's what I'll share.
Yeah, whatever you would like to share is fine, just for the next, until we can sort out when this kicks off.
Sure.
This is Lucy again.
Thank
I have
you.
another question. When going back to the point that if a borrower would go to 2 lenders, so when we log into this QuickBase, it's going to tell us that Univest or Finanza has already been selected by the borrower. Is that where we're going to see that one or the other has been working on this? Where are we going to see this, that, like for me, that Finanza is already working on this for this person?
So right now, Nick pulled up the lender dashboard. So when you log in, you should see this dashboard. And so you can see that kind of towards the right, the PI who has been working with the client, and then the lender who is working with the client. And so when someone comes in, you can search right now by address. And then if they haven't kind of been captured by either lender yet, you would go into this form and hit edit. And then when you save it, it will become yours as Univest. But if Finalta has already begun working with them, you should see the little FI.
So we as the lenders are supposed to go in and put our name in there that we're working with that client.
When the client comes to you, yes.
So when they come for the pre-qual, you'd update that.
Okay.
Jane, you received my email earlier this morning regarding
Where is that?
what information I gave you thus far, right?
I've been prepping for this, and so need to go through my emails. But I will look at it and then get back to you when I have a moment.
Sounds like a great. Sounds good. Thank you.
Okay. Thank you, Aaron.
Get out of here.
Any other questions, concerns? Okay, well, as always, please just get in touch with me and or Nick if there are kind of user things that you notice that haven't been touched on in this discussion. And we hope to keep improving the application so that it works for everyone. Thank you very much for your time.